Gold reached new all-time high this very year, and oil right now is above $100 per barrel. Which one is the smartest move to make for your money in 2026? Here is what you need to understand in 2026, because we are seeing a fascinating battle between two classic commodities, gold and oil. Gold right now is hovering between $4,500 and $4,700 after hitting a new all-time high few months ago, and oil right now have surged a little bit upward above $100 per barrel because of the tension we are seeing in the Middle East. In this video, I am comparing these two assets and telling you where I am putting fresh capital in this very year 2026. Let's start with oil. We know that the spike is driven by supply shock, disruption in key shipping routes, and geopolitical uncertainty. That is for sure. This benefits energy giants and producer and related energy stocks. And what this does is that it creates a short-term profit opportunity. A lot of people don't know this because oil can dip all the way downward with big bear retracements. Another thing you need to understand is that high oil prices cause inflation. That is very true. And what that can also do is that it can cause central bank, for example, the Federal Reserve, to keep rates higher, that is, keep increasing rate all the way to the upside, and this is not good for the market. So oil is volatile, great for tactical traders. That is, if you are a day trader or week in week out trader, that will be very good for you. But oil is risky for a long time core holding. Taking a deep look into gold, of course we know that gold acts as a safe haven asset a lot of the time, especially in the midst of geopolitical uncertainties. Central banks around the world right now are buying gold aggressively. Why? Because of its safe haven capacity and what it has proven over the years, even more than 200 to 500 years. One thing that is also very important here is that when investors seek protection in an uncertain environment, gold is where they put their money. Gold is the asset they put their bags. Now, despite the fact that gold has dropped a little bit all the way to the downside, and also a persistent inflation worries around right now and geopolitical crisis, it still remain very strong. A lot of analysts see great potential in gold right now and seeing it push towards $5,000 and above by the end of this year and beyond. So the question is, where am I putting my money? I am doing what I call a barbell approach. Let me explain what that means. A solid allocation into gold and gold ETFs, which is very important and preserving, especially during crisis and geopolitical tension and all of those stuff. So roughly 10 to 15% of my portfolio right now is into gold and gold related ETFs. Not only that, for tactical upside, for example, in the case of oil, where oil moved all the way above $100 per barrel. So what I'm doing in the oil sector is selectively looking into high quality energy stocks and also looking into midstream companies that benefit from elevated high oil prices. This is very important because it will really push your portfolio all the way to the upside in a matter of a short period of time. So what this does is that it gives me the exposure on both sides, the hedge and the growth play. So the hedge is actually on the part of gold and for capital preservation in case of chaos, and the growth play is also on the side of oil, which is very important. So the bottom line for 2026 is this: both of these, that is gold and oil, have their roles, which is very important. You need to note this. But gold currently edge over oil for a more reliable store of value, which a lot of investors know this, while oil offer a high reward opportunistic play right now. So what is your take? Are you team gold or team oil? Comment below in the comment section of this very video.